So in this video, I'm going to go over the 10 best real estate stocks of May 2023, according to Forbes Advisor magazine. Let's look at the types of real estate stocks. You've got basically 4 categories: residential, commercial, healthcare, and specialty. In addition to the various types of real estate stocks that own, operate, and develop physical properties, there are also stocks that invest in operations tangible to real estate. These include companies like mortgage REITs, which invest in various mortgage-backed securities. Let's look at some of the advantages of investing in real estate stocks. You've got diversity, professional management, liquidity, tax benefits, and regular income. Some of the risks of investing in real estate stocks include management cost, tepid growth, interest rate risk, potential market turndowns. So let's take a look at the 10 best stocks of May 2023. The first stock on the list is a company called Prologis. It's a logistics real estate company that focuses on high barrier, high growth markets, serving approximately 5,800 customers across business to business and retail online fulfillment. At the end of 2022, Prologis owned or had investments in properties and development projects totaling 1.2 billion square feet in 19 countries. For the full year 2022, the company generated $5.97 billion in revenue compared to $4.76 billion in 2021. Net earnings were $3.36 billion versus $2.93 billion in 2021. So you can take a look right here at the graphs. I'm just going to flip through each one of them real quick for each stock. So the 1 month, 3 month, 1 year, 5 year, which is almost 94% from the 5-year graph. That's not bad. Second on the list, American Tower Corporation, AMT. Founded in 1995, American Tower Corporation is a REIT that owns, operates, and develops wireless and broadcast communications, including more than 221,000 communication sites, 43,000 of which are located across the U.S. and Canada. The company employs 5,600 employees across 22 countries. In 2022, AMT grew total annual revenue by 14.5% to $10.7 billion, while net income decreased 34% year over year to $1.7 billion. So their 1 month graph, 3 month, 1 year, down almost 20%. 5-year plan, though, they're up almost 38%. Number 3 on the list, Equinix. It was founded in Silicon Valley in 1998 as a data center provider, allowing competing networks to connect and share data traffic. The company converted to a REIT in 2015 for tax benefits, and its current global infrastructure is larger than its 10 largest competitors combined. The company provides customer access to over 1,800 network services, 2,900 cloud and IT services, 1,250 financial services, and 600 content and digital media services. Their 5-year, they've had almost 87% growth. 1 year, 12.8. Next on the list is Crown Castle International Corporation. CCI is a REIT that owns and operates and leases more than 40,000 cell towers and 80,000 route miles of fiber, and offers services through multiple models, some privately owned and others in partnership with local governments and other partners. The company's infrastructure also supports more than 110,000 small cells and provides fiber connectivity solutions to every major market in the U.S. The company has made its goal to create a smaller environmental footprint by creating a shared infrastructure model that reduces the overall number of towers, small cell networks, fiber lines, and data centers needed to supply. This reduction in infrastructure also puts less of a strain on other resources like water and energy. So their 1 month graph, 3 month, down almost 18%, 1 year, down almost 36%, 5 year is up almost 11%. Public Storage PSA. The iconic orange and white public storage sign can be recognized across the country, and with good reason. Public Storage opened its first self-storage facility in 1972 and has since become the largest owner and operator of self-storage facilities in the world. The company owns nearly 2,500 facilities across the U.S. and Europe, with more than 170 million square feet of rentable space. Public Storage is one of the largest landlords in the world, serving more than 1 million customers across 38 states and 7 EU nations. So you can check out the graph. See, their 1 month is down almost 3.5–4%. 3 months down. 1 year is down almost 7.5%. 5 years up almost 40% though. Next on the list is Realty Income Corporation. RIC is a REIT that was founded in 1969 with the primary aim of providing investors with monthly income that would increase over time. RI's dividends are paid from revenue generated through leased real estate, and since going public in 1994, the company has grown its portfolio to more than 11,000 properties in all 50 states, plus Puerto Rico, the UK, and Spain. As with the other companies on this list, RI works hard to curb the environmental impact, including launching their green financing framework to raise capital for acquisition and development of green certified buildings and implementation of projects that further their stability goal. Taking a look at their graph, 1 month's down, 3 month, 1 year is almost down 11%. The 5 year though is up almost 20.5%. Simon Property Group. Simon Property Group is a REIT that owns, operates, and develops shopping, dining, and entertaining retail properties. The company is one of the largest owners and operators of these type of businesses in the world, with locations in Northern America, 37 states, Puerto Rico, plus Europe and Asia. In addition to being the largest mall operator in the U.S., SPG also owns and operates premium outlets and lifestyle centers, as well as its international properties. With more than 23,000 specialty shop locations across their portfolio, the company provides $60 billion in annual U.S. sales from 3 billion annual customers. All right, taking a look at their Simon Property Group graph, 1 month is down, 3 months down over 13%, 1 year is down over 7%. Their 5 year graph's down over 31.5%. Welltower Inc. Welltower is a healthcare REIT that was founded in 1970. The company owns and operates healthcare properties, including senior housing, post-acute care, and outpatient medical. In 2018, the company completed its acquisition of Quality Care Properties, HCR, Manicare, and Arden Courts, previously the second largest provider of post-acute services and long-term care in the U.S. So their 1 month graphs, they're up a little bit. 3 month, 1 year is down, but the 5 year is up over 41%. Vicky Properties Inc. Vicky Properties is a relatively new REIT that emerged from the bankruptcy of casino company Caesars Entertainment in 2017. The old Caesars Entertainment famously owned the Las Vegas casino Caesars Palace, plus other gaming and hotel properties throughout the U.S., and went through many corporate reorganizations until entering bankruptcy in 2015. Today, Vicky owns more than 50 hotel, casino, racetrack, and golf course real estate assets in the U.S. and Canada. The company does not manage any of these hospitality businesses, instead contracting with third parties to operate the properties. Taking a look at their 1 month, they're down. 3 month, 1 year is up almost 7.5%. And their 5 year is almost up 60%, a little over 60%. That's good. Okay, last on the list, CoStar Group. CoStar is the only non-REIT on the list of the biggest real estate companies by market capitalization. The firm provides marketing and data analysis services to companies in the global commercial property market. Among its biggest brands are online marketplaces for buying and selling real estate, plus research and data provision. So their 1 month, the last month's up 10%. 1 year's up almost over 39%. That's really good. So their 5 year graph is over 101%. That's great. That's definitely one that would be on my list to watch for sure. So out of the 10 stocks we looked at, only 4 of the 10 were profitable in the last 5 years, while only 5 of the 10 were profitable in the last year. Well, there you go, the 10 best real estate stocks of May 2023, according to Forbes Advisor magazine. What do you think? Some of them I would definitely not invest in myself, but leave your comments below. See what you guys think. I appreciate it. If you haven't already, make sure and hit the like button. Subscribe to my channel. I greatly appreciate it. As always, thanks and have a great day.